Hi, it's Bruce. This is about retirement dividends, and my channel is Targeted Wealth Creation. What I wanted to do today, this is a follow-up on the one where I showed you how I was able to generate $40,000 a month on an investment of less than $384,000. I was in 2 YMAX funds. Subsequently, I've added some more, and even this last month, because I wasn't too worried about trading in and out, I have 3 different accounts, and my 3 different accounts are 2 are non-taxable IRAs, and one of them, the smallest of the 3, is a taxable account. So I hold the least amount of my YMAX company shares or fund shares in the Schwab. It was Ameritrade for years and years. Loved Thinkorswim, still do, but don't care much for the Schwab user interface. But it's still, when I'm within Thinkorswim, it's nice. So anyway, what I wanted to do, because I got a lot of questions and a lot of follow-up on my channel from putting out the, I'm generating 40,000 a month, with the, I think it was 7,391. I think that's the shares that I showed in Coney and in Misty, right? So, but what I wanted to do was, some of the people are asking, and I've seen these tutorials out there, how can I retire early? I retired early, but I was still 50 or so. But I was able to do that mainly. They didn't have these kind of funds. Boy, did I wish they had this kind of return. I told that story before. I literally chased some yield at like 14% when there were Canadian oil sands around 2008. I had taken 300,000 and turned it into 1.9 million, almost 2 million liquid account, not counting real estate, cars, that kind of stuff. And I did that all by doing the precious metals sector, all during the year of 2000, the decade of 2000. After the dot-com crash, I was making a lot of money. I went through the agony of seeing the NASDAQ go from 5,000 in March of 2020 down to 1,500. Saw my own company, not my company, but the big corporation that I work for, stock go down tremendously after it had been the New York Stock Exchange decade of the year in the 90s. It was the highest performing New York Stock Exchange. There were some NASDAQ performers like Cisco and that beat it, but no New York Stock Exchange tech company outperformed it for the decade of the 90s. But I wasn't there, that much of the 90s. I was there a couple years and then into 2009 before I retired. But what I did after that dot-com bubble, I sat down and said, what can I do? How can I grow my wealth so that I can retire? I'd gone through a divorce. It cost me a lot of money, splitting real estate, all kinds of things. And I just really wanted out of the treadmill and off the treadmill of the corporate world, even though I was making a lot of money. So all I'm saying to you is there's a lot of haters out there on YMAX. I think it's fabulous for somebody who spent 35 years utilizing options. And I can tell you, during that decade of the 2000s, I really went to work on options. I would sell puts on all my favorite, medium and large cap mining stocks, right? Because gold was moving up, silver was moving up, and whenever they dipped, I would go out and sell a put, generate more cash, use that cash to get into another explorer miner. So, I would sell covered calls when I thought they were going to trend down, right? And just keep the premium and not worry about being called out. So all kinds of option strategies. but they didn't really have a synthetic option. You know, there's some ways on the retail market you can do a combo, right? Buy a call, sell a put, same strike price. But when you're not doing it in a flex environment where you can have it assigned early, which is what the benefit that YMAX has. So FYI, a lot of guys, oh, you know, it's a scam, you know, it's NAV reduction, it's this, just look at Tesla on Tesla. You know, none of that's true. The only true thing is, you know, Tesla went up 40 times. So I question somebody going into Tesla at a time that Tesla is more likely to go down. These are not funds. They're not bear market funds. But guess what? There is a bear market YMAX fund called Crash, ironically, right? CRSH. Some people say it's not Crash. What's the other? I can't even think of it because Crash just sticks in my brain. But anyway, I think YMAX is fabulous. I said that before. I showed the example of generating 40,000 a month based on, you know, 384,000. Well, I'm moving that around sometimes because I've been watching these funds, and Coney isn't going to pay out as well. The underlying is Coinbase, so I moved a bunch of my shares into Misty that were in Coney, so I double loaded up to Misty. I also went into GDXY, a brand new fund that won't pay out till July, and I also went into YBit, a new BTC. It actually tracks BITO, but I already own some BITO. So people may say, well, why don't you show your stuff, right? Well, I can do that, but honestly, not everybody out there in the marketplace wants to see how you can get 40,000 a month. If they've got 400,000 that they can play with, maybe they're doing real estate with it, maybe they're doing something else. Clearly, I want to attract viewers of all portfolio size. So if you're 30, you're 40, you're 50, and you're saying, hey, maybe I'm going to move to Asia. I only need 2,000 and plus my Social Security of 1,500. You know, some kind of number. So I want to broadly appeal to other people, and what can I do with these YMAX funds, or, you know, in some cases Defiance and a few others, but I'm not a big fan of a lot of them. I love what YMAX is doing compared to most, right? You guys want to go out and collect 15% and be conservative and say your NAV never reduces? Well, I can give you a very conservative approach. So let's jump in here. My clickbait would have said how to make $3,000, you know, perpetually on a $100,000 investment. So $3,082 a month on it generates 36,984. Now, yeah, there's some taxes depending on your tax bracket, but it wouldn't be great if you're retired, right? So let's look at this. This is a much more conservative approach to investing with YMAX, as it is invested in some 20 individual securities across many sectors. If you look at what I was showing, I'm in two funds. I'm in two crypto-oriented, you know, high volatility, high IV, okay? And yeah, there's some risk to it, but that's a portion of my, you know, wealth. I have more than that in physical metals put away, right? In gold and silver. So I'm in a position that looks risky, but it's not as risky when I look at how safe I have other things. So again, you know, I'm just trying to teach. I'm trying to educate. What can you do, right? So anybody that wants to go out and look at these ETFs, go to their website to verify the payouts, right? All of this is legit. There's no scam. There's no Bernie Madoff. You know, there's a lot of haters. I've been going around on some of the YouTube sites and writing comments because, you know, once something spreads, oh, it's a return of capital. They don't, you know, it's a scam. They just take your money and give you back part of your money. It's total BS. They're just using options. Why is it that some of these YouTubers love the covered calls? To me, covered calls are vanilla, right? You know, it's like when you first drink wine and you're a teenager, or 20, 21, you go get a pink rosé that later when you've matured, you have more money, you know what a fine wine is. You don't want some sweet, cheap wine, right? And go back to your youth and think about what you drink. So it's the same thing with these kind of funds. You really have to appreciate the techniques and the styles of the sophisticated options. I mean, for me, it's a no-brainer. But again, so let's go over that. So these are all very liquid. So how can someone say this is huge risk? Yeah, the market go down 30%. And you know what? So what? So does your 401k when you're working at a big company and it tells you, you know, and your 401k is being handled by Fidelity. Good luck with those choices, right? You know, I remember in 2008 moving everything into money market and after Lehman Brothers calling and demanding that Fidelity with my, you know, money in my 401k that they could assure me that the money market par value was going to stay $1. I remember that conversation like yesterday. Fear spread rampant. So the other thing I'd say to you guys, if you want somebody who's mature, right, who's been through the markets for 35 years and more, done options for that length of time, who's seen cycles go up and down, right, lived through, you know, oil embargoes and long oil lines. And all I'm saying is there's nothing wrong with youth. Youth has energy, youth is hungry. But when you're listening to a 20-year-old or a 30-year-old tell you about, you know, what you should be doing, I would question that because most people with capital are 40, 50, 60. That's when you began acquiring capital. I'm not saying that there's not a young millionaire that's 20 years old. And he may be brilliant, you know, at Facebook ads and generating money and use social media influence. One of my good friends, his son is you know, 22 years old. He's got a coaching career. He's got, you know, 250,000 subscribers on YouTube. He's growing his business. He has some nutrition drinks. You know, there's just, you know, and I reviewed, you know, just 3 years ago, and he had 25,000 viewers, 250, 260,000. He hit a niche. The college guys all getting NIL money, they're getting recruited by the college. He's getting the junior high school and the high school that are doing these passing leagues. He's teaching quarterback skills. You know, it started in Southern California, one of the biggest markets of all, right? He's now going out with his older brother and doing camps and, you know, all across the country. He's filling that niche, okay? To me, that's what a lot of these high yield ETFs are doing. They're products that didn't exist in the past, right? So these parents are dying to have their son, you know, coached up as a quarterback. Or he's just focusing on quarterbacks and wide receivers. So he'll do individual coaching on an hourly if he's there, but he's flying to these locales with his brother and a few other ball players. He was a high school quarterback out in Southern California, one of the top schools. And really too small and short in stature to go play at a big competitive Division I school. So he went into coaching right away. What a bright kid. You know, what energy. So I'm just so proud of my friend. I tell him all the time because he knows nothing. You know, the era we're from, you know, social media didn't really exist. And I said, hey, your son is just really kicking butt. So anyway, I'll get into this. So here's a much more conservative approach covering, look at these stocks. This is what YMAX, the fund of funds, and these are all the single stock funds, although ARK Innovation is hardly a single stock fund. And treasuries, right? Because that's just yield. But all the other ones are just individual companies that they own, and they create synthetic long stock options, buy call, sell put, and then sell naked calls, you know, to try and catch the movement and collect more premium to pay out. But they can pay out premium from the synthetics, which are typically about a month out. So again, if you want to read up on all this stuff, just Google YMAX ETFs, right? And go to their website. And actually, I have something here. So let's do that, just so I can make this even more interesting. And sorry, sometimes I digress on subjects, but I want you guys to know I'm a real person. I've lived life. I have wisdom, experience. You become your father whether you want to be or not. Your father always tells you when you're young, and you think you know it all, right? Well, guess what? You come to find out later that they're very right about so many things. He was part of that World War II generation. He was flying a bomber pilot, and that's when a real war existed for U.S., when Germany and Japan and all the things that were going on, and we just passed Memorial Day, and I think of the sacrifice that men like my father, gave to this country. Again, not to go too far on that whole thing. And we had kind of an ugly, in my area, a Vietnam, war, which I didn't have to go, but it wasn't a popular war, right? The U.S. should just stay out of a lot of these skirmishes that we find ourselves in, unless there's real things at stake. So anyway, this is the website, our ETFs. You see all the, what I call the single stock funds, right? That are here, and then you see distributions. Which one am I in now? I am in, sometimes you hit something without realizing it. Yeah, YMAX, exactly where I wanted to be. So they produce two things. They take this distribution rate, and they take the last payment, okay, which is this 73.17. And they project out if that was paid for 12 months. Well, that's the highest one paid out of the 4. So I didn't do that, right? But I wanted you to see this. Some of you know this stuff and all the rest, but this is all legit. It started on 116, right? YMAX. They start every fund at $20. It's just what a fund starts at. If you see one at 14, then you know it went down, right? That's the one that everybody jumps on and says, see, you lose all your money. Well, how about all the Conies and Misties that, they're 34, 24, like that, right? They started at 20, Misty's only had 2 payments. By the time this third payment comes out, it's probably $250, $220. They'll have paid $9 almost, right, in 3 months. How's that for something you could have bought at $20? That's $33, $34. So these things exist. They're real. They're not scams. Who says, I didn't say perpetual, that you're going to get 50 years out of this. I mean, that's why I have a YouTube channel, because I go over all this stuff. I tell my subscribers, listen, I'm going to reallocate. I'm going to get back into Coney, but I see Coney paying $1.20 this month. That's on the lower end. It paid $2.28 last month. It's paid $2.79. I don't want to get $1. I want to put them back in Misty and get $2, $2.20, $2.50, right? I can always switch back. You just have to make sure you're exposed to. I probably won't get a wash sale in my. I'll do it in my IRA, so it's not an issue. But if you do it in your regular account, a wash sale is when you sell something and buy it back within 30 days. Well, you can wait, and it'll be 34 days, and it's not subject to the wash sale. But again, if you're in a tax deferred, brilliant, right? You can do so much there. So look at these. This is AI, which is AI3, I think is the symbol for their AI, and it hasn't done that well, honestly. AMD, everybody knows that, Advanced Micro Devices, right? Some of these I can tell, Apple, Amazon, Coinbase, Disney, Facebook, right? Money Market, Google, JPM, right? JP Morgan. So I put the list out here as well. Yeah, here we go. Sorry. Let me drag that one over. So these are the ETFs, right? Amazon, Facebook, Google, Netflix, Coney, Disney, Microsoft, ExxonMobil, JP Morgan, AMD, PayPal, Square, Myrna, AI, MicroStrategy, Ybit, based on BTC, will pay its first dividend. I'm projecting that one to pay 250. Could be closer to 3. Crash is the Tesla bear fund that pays income, right? This YMAX is what I'm talking about. Very conservative compared to a lot of these, right? Tesla, which is one of the few funds that really sucks in terms of its NAV going down. Again, I think they just caught Tesla in the wrong period of time when the fund launched, frankly. There'll be a period in time, I don't know when, I'd have to study the charts and see it, right? You got ARC Innovation, that one's been down. Apple's held its own. I mean, and Apple's in 2 funds. It's in this one. NVIDIA's been killing it. But again, sometimes if you run too fast, too high, you run by those calls they sell on the weekly. They lose money there. They make it up on the synthetic, but your income's not as high as it could be. If you get 5-8% up weeks consistent, right, all the time, or in 3 months, you're going to kill it. It's never going to perform as well as the underlying, but the total return can exceed the underlying, right? Because you're going to get a gain in NVIDIA, and then you're going to get all that monthly income. And these guys will say, oh yeah, they're just paying it out of what you bought it for. Not true. I think NVIDIA's like, I don't even, 24, 28. It's not 20. If something's below 20, it's gone down. Okay. So anyway, these are the averages, and what I did was I rolled these in. These are the earliest funds, right? Then the next group came in September, then October. So this is kind of all the funds, and I didn't even update this one yet. So Ybit is about to pay out. It came at very late April, not in time to make a May distribution, but will. Crash around the same thing. Both of these, I believe Crash will pay this June. The newest one is GDXY. I love that one. That mimics back to my GDX experience and my precious miners. So I think over the next 5 years, that's going to be a darling. That dude's going to run. That's going to be a beast, right? Because the precious metals miners compared to the metals, way undervalued, out of favor. Nobody wants to own them. Well, it all starts to change when you get some massive earnings, quarter to quarter. And that's projected for Q2 and should really soar in Q3. Even if gold went back to 2000, these earnings are going to be phenomenal for the big miners. And the majors always lead initially. It's like crypto. BTC leads, Ethereum follows, Solana, I don't even know. I've never bought any of the meme coins and the shit coins and, all that. But I'm not saying it's a bad marketplace. I just don't have the time or interest level to chase that, right? What I already know and have 15, 20 years in the precious metals and commodities. Commodities was a 70s asset class, and then again in the decade of 2020s, and we're back there again. So commodities and hard assets will outperform tech. Now, that doesn't mean you don't have a few darlings in tech. Tech is always pushing new frontiers. Love Palantir. By the way, Palantir likely within 90 days will be launched. YMAX has applied for 30 new funds. They get approval by the SEC, then they decide, once they're approved, when they actually want to launch them. So approval includes the symbol, the ability to go forward, right? So they apply, they work all this out over 75 days with the SEC. So they recently submitted 30 new names, which I know most of them from listening to Jay on his interview. So anyway, let's get back into the key stuff. I can just do my sheet now. I wanted to establish a little credibility with you guys. So the whole point is I call this retire on 5K a month. Well, I picked 3 after all. I could have gone and found a YMAX fund, right? I could have found one that generated 10,000 on 100. The same way I was getting 40 on 383,000, almost 384. But I thought I would give you some conservativeness, right? So you're spread in 20 buckets here, and some of the largest cap, most liquid companies in the USA. Not only that, but there are funds like in Tesla and a lot of these NVIDIA where you can go long 2 times with leverage, you can go short 2 times. And when you can leverage your money that's just sitting there collecting income because you're worried about a shortfall, and they'll have some more short funds also. I think they got a QQQ type that's just short the NASDAQ, right? And they'll have one for the S&P 500. So you can make income and be short to offset where you're long. So I just think it's a fallacy on people saying that these don't belong. So here we are. I took YMAX. Okay, where's YMAX today? I think on last Friday it closed at $20.11. Okay, it's had 3 payments. It came out, what date did I say? January 16th. So I got a formula here for someone that didn't see it. How many days is that? Well, my formula says what is today. I wrote what the day is, right? Early morning, and said, okay, that this is 138 days long. Well, why do I need to know that? Because I want to know what the yield is, right? I want to know what the annualized yield, because if I tell you you made 10 bucks on 100 in 365 days, then I could say your annual yield is 10%, right? $10 on 100 is 1/10. It's 10%. Well, if you made that in a month, your yield is 10% times 12 months, right? If you keep making $10 every month on 100, that's a big yield. So that's why I'm annualizing this yield, right? And I'm giving you 37.46. And I'm really saying 36 of it because what I did, okay, so I took 5,000, slow down, Bruce, calm down. I took 5,000 shares and I said I bought them at $20. You know, you could have bought them last week at $20. You probably could have bought them on Friday in the trading for $20. So they've been around 20. I think they've been as high as 20, $22, close to 22, and maybe lower 19s. Not a huge spread in the 4+ month. Well, actually, we're going on 5 months when we get into June. Now, these guys will get another payment. I think it's around the 16th. These fund of funds and YMAX, and Ulti all pay in the middle of the month, as opposed to all these single stock funds. If you buy them, they all pay around the end of the first week. So our payday in all of the single stock funds, the Netflix, the PayPals, the Teslas, the Microsofts, all these, they're going to pay on June 7th if you own those. They declare on June 5th. So these guys are going to declare, I think, around the 16th, the 13th, and they're going to pay a few days after that. You can go to the website and you can look up the schedule, and you can discern between those 3 type of funds versus the 19 or 20 over here. All right. And you don't see YBIT listed, and you don't see GDXY, which you probably will. If you think about GDXY, it's based on a large ETF of gold and silver miners, medium and large cap, right? So I love that fund. I love the fact I'm going to be able to get income on that guy. And especially in a bull market, and understanding the bull market and the cycles and how to hedge it, and when to go 2 and 3 times leverage long, and how to collect income, and let these fund managers do the synthetics. I don't have to put them all on. Okay, so the net on this is a real $100,000 opportunity for someone. To me, this fits the 40-year-old, the 30-year-old, the 50-year-old, whoever has the 100, the 60-year-old, So if you've got Social Security coming or will have it, and you want to supplement, right? I mean, there's some areas you can live in the U.S., but if you want to go to a cheaper place, or if you're 30 and you want to travel around the world for a while and you want to teach English, you want to do something, I mean, most of those people probably don't have 100,000, right? But take this concept and cut it in half, cut it in a third, cut it by 5, right? The math is going to work the same. 20,000, right, is going to be 1/5 of this. 1/5 of this is going to be $65, right? Something like that. Sorry, 600. Where did I? 600 and something, right? Let's do it right now. Divide by 5. 600, yeah, $616, right? So if I make this 20,000, that's exactly what this will generate, right? Per month. See, so instead of getting 3,082, you're going to get $616. Sorry, guys, I jumped around in my head on the math. So the key here is to understand these are legit. Play with this. Hit me up. Tell me what you want to see. I mean, I can go through my long list of all of the other funds and come in here, right? And I've got these all averaged, right? The new guys are coming in. So it's not a problem to go through the fund. And here's an average, right? Tesla's paid this. The problem's been is the loss, right? This kind of is one of the lower ones. This is ARC, which is low. Look at NVIDIA, right? It's averaged over its life, right? Some 8 or 9 payments, I think. It's clearly one of the longer ones. Amazon. I love Amazon, right? It's been paying since September. So there's 9 payments, about to be its 10th one. It's not huge, but look at it. It's paying 60 cents. So the yield on that, go figure out what AMZ is trading at. My guess is it's probably in the low 20s. I can plug it in somewhere. Let's do AMZ. And then have a yield. 22.29, right? So, you know, that's a fabulous, you know, you can do the math on AMZ, pretty large company, and I've got a lot of friends that I used to work with in tech that are working and selling their cloud services. One of my friends is the international manager for Honda, right? So the Honda team in the auto sector. But you know, Amazon is a giant. Most people don't even know that, right? I was in the tech industry and all that. Most people think about the retail. How about advertising, right? How about Amazon Prime and all the things? We think of Prime as shipping and getting fast shipping and all that. Well, what about all the content? The way PayPal is generating content. Amazon Prime is growing. They've done some car kinds of things in the electric car. Their competition to Google on the ad space will just be huge going forward. So that's probably the biggest growth factor. But yeah, those kind of companies don't go up 4 times a year, right? NVIDIA's kind of the exception, and I think they'll be hurt by competition in 6 months or a year. They'll be fine. They'll still exist. They'll be a big company. But their ability to, you know, double every quarter or something, that'll start slowing down. You can't do that with that kind of volume, right? Just like Amazon's not going to have a 300% increase in its share price. It just, the market cap's too big, and there's just too many shares outstanding, and their revenues are too big. So, but this is a nice 60 cents. What were we getting for the average on our example? Yeah, we were getting 61, right? I averaged all these. So there's a case. You don't want YMAX? Now, I would say to you, on YMAX, you're getting Amazon in here, right? And you're getting all these others. You got Moderna, whether you like pharmaceutical. You know, you got banking, you got tech, you got entertainment, right? You got semiconductor, you got AI, you got social media, you got advertising, tech, you got crypto, You got GPUs and data centers. You got consumer electronics, right? You've got payment systems. You got a lot of payment systems again in PayPal, oil, energy, right? So you're diversified here to a big extreme. So those of you that want to look at this kind of stuff, now I'm probably going to get some comments, I own it, great, right? I'll buy some of it at times. Right now, I knew what was happening and was willing to take the risk because it's not a huge percent of my capital, right? And I've been loading up also on Ybit because I like BTC in the next 6 to 8 months. It'll probably peak, probably run up to 93 to 104,000, pull back again, maybe to where it broke out at 72. And then start up the next turn. I mean, it could be $1 million long term. I mean, you know, who knows? I mean, it's digital gold. I love gold itself, right? It's a store of wealth, time tested. It just doesn't travel the way Bitcoin does, BTC. I'm not after all these other technologies. There'll be a washing out of all that stuff. You talk about making and losing fortunes and meme coins and some of the other stuff. I'm too old to play that game. Okay, so that's what I got for you. Oh, let me tell you one more thing. So what's rule of 72? Raise your hand. Oh yeah, hey Debbie, Bill, good job. James, Jim? I'm kidding. I've been doing this too long. So I am going to start soon on my lives, and my Discord's ready to go as well on my channel. But this rule of 72, look it up if you don't know it. It's an old mathematic rule that's been around forever. Basically said, what does it take at an interest rate to double something, right? So if you've got $100 and you put it in the bank, what kind of interest level? Or how do I take 6% and figure out how many years it takes to double my money? Right? So it's compounded, right? I keep on investing, you know, say I get paid at the end of the year on $100, 6%. So I have $106. So year 2 is 106, right? So then I get, you know what, 6%, I get almost, on the $100, almost 7, right? 106.96. And then I add that to that balance, right? So it's a compounding effective rate. Well, did you know when you divide 36 down here, let's assume it's flat, just stays 20% or $20, right? Goes up some months, goes down, but the long-term return is $20. It can achieve that. It really can achieve that. There's not a built-in NAV reduction. Yeah, it goes down by the yield, but by the way, every single security entity in the world goes down by their dividend payout. It's a function of accounting formula. What do you think net asset value stands for, right? You divide it. Yeah, how do you figure market cap? You know, the capitalization of a company. You divide the number of shares by the share price. It's market cap, right? Sometimes the stock price can vary, but it should be in line with that, and people buy it on a discount or pay a premium, right? That happens. But anyway, let's do the rule of 72. So at 36%, when I divide into 72, I get 2. So every 2 years, I double my money. Now, if somebody's retiring and they want to spend this money, more power to you. Then just try to watch your NAV. You don't want this thing to go down to 15 to 12, right? Because you start eating your capital, and then you're probably going to end up producing less income. But there's all kinds of hedges you can do about that stuff, right? But if you want to just spend the money, then don't worry about this one. But if you're 40, right, and you want to compound it, I want you to think about dripping or just putting all your stuff in, and then that's a whole nother thing that I'm not even accounting for, right? But it probably would be. The drip probably would for the rule of 72, since it's compounded. I'll run that spreadsheet for you. But anyway, hit me up. I've gone plenty length of time here. So let me know what excites you about it. What do you want to know? What's your fears? What's your concern? Do you want me to do a different fund? Do you want me to look at something? I don't need to do them, frankly, if they're 5% or 7% on treasuries. No thanks, right? But if you want to do something that's 16 to 20%, I mean, it wasn't but a year ago, that I had substantial monies in PBR, and PBRA, Brazil Oil Company, right? So over 21, 22, 23, the tail end of 23 is when I started seeing YMAX and started moving monies in there. But I was living on 17%. Now, in some fairness, I got in PBR and PBRA. They're just a limited version of the stock. They pay the exact same dividend. And for quite a while, PBRA was 10% less than PBR. And their ADRs on New York Stock Exchange, they pay out $4 billion. They're almost on a quarter. It's not exactly quarter, but pretty much it's quarter. They were selling off some assets, and at one point it was a 50% yield. And people were saying it's not going to last, and that was pretty obvious. But it's a good 14 to 17% yield, and I know where energy's going. Energy's doing nothing but going up, generally speaking, because we're in a commodity or hard asset era. We're in this decade for another 5, 8, 9 years of where copper, metals, food, coffee, real things that you can't just simulate. I mean, I think AI will have a boom, but maybe the NASDAQ's only going to double, right, in the next 8 years. A lot of these hard assets are going to have 4- and 5-fold. Think about food. Where's food going to go? You're going to think in time that 4 or 5% yields are small. We probably will have another opportunity to get a 20% in treasuries, probably near the end of this decade. So these boom and bust cycles go on. And then they flush out again, right? And things come back and they become fair valued and way undervalued and start that cycle. So know what cycle you're in, just like if you pick one of these funds. Know where you are in the life cycle of that stock and what the likelihood of appreciation is, right? Versus depreciation in the stock. Okay, said enough. Bruce out. Targeted wealth creation. I'm not a financial advisor. This is not financial advice. It's for fun and entertainment. Hope you were entertained. Okay, bye.